If you are joining us here on the webinar, always appreciate you taking time out of your busy day to join this conversation. It's a topic that personally, short story, my stepfather is a self-insured work comp guru and had been like for a long part of his career. And him and I always talked about like the importance of getting the right people on the bus and hiring the right people and how that can prevent work comp issues. And then we've also talked a lot about, and this is where Rob comes in, is that the industry is so small and so niche. The talent in that industry is prone to mistakes, right? And Rob's world and is a recovery guardian, and they go find the mistakes in work comp programs and find money for people. And it's pretty remarkable because of a huge success rate. And I'll let you talk more about that when you introduce yourself here. And Gary takes this really cool holistic approach. He finds money by attacking it through his 4-quadrant model, and has been a big proponent of Integrity First, which is a tool that is used to prevent the work comp claims from happening to begin with. So we began this relationship with Recovery and Gary because we love solving the entire problem for people. And that's why I have this backdrop. I solve hard hiring problems. I like to solve complete problems for people. I like to bring smart people together. And so we're bringing smart people together to share a little bit about a recipe on how you might do that. If work comp is crushing your business, it's crushing your costs, you've got a 1.2, a 1.5 EMOD, or you're self-insured or captive group, obviously these things can be restrictive to you accomplishing your business initiatives. And we'll share some stories about that as we go. I'm sure some of you can relate. Without further ado, real quick, Gary, give us just a quick introduction. Tell us who you are, what you've done as a career, and then we'll introduce Rob.
Thank you. Thank you for joining. My name is obviously Gary Pederson. I have a company called The Edge, and I focus on finding money for large employers as a general rule. And I have a model that's based on 4 quadrants. I'm looking at management, hiring and firing, safety, and then also on the claim end of it. And I work with companies. I'm focused more on the claim side, preventing claims and mitigating claims when they happen from that end of it. Some background, I've been in the business for over 30 years. I've created 2 national work comp practices for different brokers. And that's a little bit about me.
Awesome. Thanks for joining us, Gary, out of your busy day. Rob, what's Recovery Guard about? How did you get into this? Who are you?
So actually, I started, I appreciate it. Thanks for having me on. So about 10 years ago, I actually started an expense reduction business. I had spent about 10 years on Wall Street, and the last 6 of them were in the accounting department at a hedge fund. And I couldn't see myself staying there for the rest of my life. So I had some difficult decisions to make, and I ultimately wound up leaving, took some time off, and then started an expense reduction business that my accountant, who's like a big brother, helped me set up, and offering a number of different services. And one of them was this work comp audit service. And I'll never forget the first work comp client that I got. And this is where the light bulb went off. I literally walked in. This was my first work comp deal. I'm trying to remember my script and go through what I need to say and how I'm going to hopefully get this client. I walk in, he hands me a manila envelope. It's about this thick. He throws it on the table and he says, "I don't give an F what you do, just fix it." I said, "Let me tell you about it." He said, "I don't care. I don't care what you have to say. Take it, fix it." He pointed to his assistant. He said, "You get him whatever he needs, just fix it." And I just looked. I said, "Oh, okay. There's got to be something to this."
He knew it was jacked up. Right.
Oh,
it was all wrong.
It wasn't.
He couldn't take the time to fix it himself.
It wasn't even that it was jacked up. It was just, I guess his mod had shot through the roof, and it was enough to get him so angry. That's how the meeting went. So that was my first work comp client. And then I started to notice every meeting that I went to, I'm offering this entree of different expense reduction services. And this was the easiest conversation to have with a business owner, because there was always a lot of pain. I would say probably 9.9 or 11 out of 10 business owners that you talk to, when it comes to work comp, there's pain. So it's just an easy conversation to have. They don't need to go to the outside accountant and get permission from this one, get permission from that one. There's pain and they want it fixed.
Yeah. And there's a ton of lost money, and it comes from lots of different areas. Now, So I love what you guys do because you do it from an accounting perspective. You look at the numbers, the logistics, the underwriting, I guess, all the little things and a bunch of different factors, but you can go in and find the problems and fix them.
Yeah, we're looking for mistakes. Not a lot of people know that. As a matter of fact, a very quick story I'll tell you. One of my old clients he was the CFO of a construction company.
No.
Used to work for a big accounting firm in New York and was actually in the auditing department for construction companies.
No.
And he didn't even know that this service existed. And at the point that I met him, he was the CFO of a construction company for I think 12 or 13 years at that point.
Yeah.
So not a lot of people know that this exists.
And obviously, I don't even know if you could do this yourself. You really have to know what to look for, I would assume, right?
Yeah, we're looking at 40 to 45 different line items per policy period. And we're going back up to 7 years. And the reason we go back up to 7 years is when we find mistakes, if they go back that far, we leave it in the carrier's court. Let them tell us how much they're going to give us. Sometimes they'll stop short of the 7 years. In a handful of cases, they've even gone beyond 7 years, depending on the type of mistake that it was.
So you can go back and say, hey, I don't know, 5 years ago, you made a mistake in how you calculated my rate for this whatever class of people, and that miscalculation cost me $1 million or $500,000 or $100,000 or something.
Yeah.
Right? All big numbers. Even if
Yeah.
it's $20,000 from a small business and it's 20 grand, that's a lot of money, man.
Of course, it's all relative.
It's a new vehicle for my fleet or something. And you'll go back to them and they'll actually agree. They'll be like, oh, oops, yeah, we made a mistake. And yeah, technically we owe you money. They'll actually be like, yeah, we'll write you a check for that or credit your next premium policy.
Yes, so it depends, right? So a lot of times when we get beyond 3, 4, 5 years, it's usually if it's with the same carrier, right? A lot of clients that we deal with have different carriers. Usually when you're with the same carrier and there's a history, 3, 5, 7 years, that's when they're more willing to go back on those older years, when you can show that there's been a pattern over that period of time. So,
yeah, they want to keep you as a client. They're like, okay, well,
exactly. And especially when we give our reports, we're showing where the errors were. And it comes with supporting documentation to say, hey, listen, here's where you screwed up. We're calling it out. And this is what we believe to be the changes should be. And please let us know when it's endorsed to the policy.
Yeah, yeah.
And I think it's important to point out, it is an insurance, it's a contract. With certain provisions, it's a contract. And if there's a mistake or something in it, you can force them to clean that up. And another point I would make about why I love that the service is most of my clients, they didn't go to school on work comp. In fact, they don't really like work comp. And because of that, they don't really learn work comp. And so so that's some of the reason you need somebody that really focuses on this stuff and looks at it. And another problem in the industry, and I'm an ex-insurance broker, but they get lazy sometimes. I don't mean in a bad way, but you get renewals, people are busy, and you don't always get all the details and look at everything. And that's why it's so important to have somebody look at it and make sure you're not overpaying.
Yeah, agreed. If you look at the policy terms and conditions on a work comp policy, there's really no standard for what the insured's rights are in terms of auditing the carrier, but the carrier has language in there about, I think it's roughly, generally you see like a 3-year period where they reserve the right to come back and audit your policy to make sure that it's accurate. Some will default just to that, but in a lot of cases, like I said, if we can show that it's been consistent over a period of time, that's when they're willing to play ball and go back on those older years.
Yeah, yeah. So the big thing where our two worlds converge, let's just take E-mods, for example. I mean, there's a lot of other examples here when we start getting captives and self-insureds and things where definitely some big time stuff. And that's what Gary plays a lot with. But so this is a question I can never feel like I can get a great answer for, but maybe you guys can shed some light for me on this. One is average. First of all, Gary, tell us what one means.
Gary, you want to take that or you want me to take it?
Yeah,
Up to you.
I'd like to take it. So one is what we call average. You're average with the industry by the class of work you do. And so one means you're average. And so a lot of times I'm working with large labor intensive employers and I go, you basically got a C. And I go, is a C really where you want to be when you're competing, especially if you're in a labor intensive, expensive work comp industry? And so I usually throw out, and I'll write it out on a whiteboard and I'll go, okay, an A would be having a 0.7 EMOD and a B a 0.85, and then a 115 would be a D, and a 130 puts you at an F. And I've seen have clients that are in the even much higher than that. The funny part for me is I work with large clients on large deductible programs, and the EMOD really doesn't drive the premium costs, but it does give you a benchmark. How are you doing in your industry with your competitors? So there's a lot of great information in an experience mod. Another way that I use them is, let's say you're a national company, you might find out you're doing great in these 7 states, but in 4 states, you're doing terrible versus what you are expected to have in losses. So anyways, that's another way I look at EMOD.
Bobby, being the mathematical genius that you are, maybe you can explain this next question to me. So if you are, let's see, I'm gonna give you maybe a scenario. So I talked, and I'm just a layman, like I got these roofing clients, the roofers, and they always tell me the work comp is gonna literally put me out of business, right? Because they might be paying like 50, 60 cents to the dollar. So they pay somebody $10 an hour, or nowadays like $20, $25 an hour, or $30 an hour. They're paying 50% more on top of that. So $20 an hour, it's costing them a minimum just on the work comp part of that. $30 an hour, $10 an hour just to ensure them to show up for 1 hour's worth of work. That's a huge number. Now, I would imagine if your EMOD is a 0.7, then maybe it's not. So what's the difference, right? What does that mean, dollar cents?
Yeah, so look at that. So a 0.7, you would say that you're 30% better or safer than that of your peers, right? And if you're a 1.3, you'd be 30% worse or riskier than your peers. So you're looking at, if you're a 0.7, you're looking at roughly a 30% discount applied to your manual rating.
So it does work that way. So if you're 0.7, let's say it's roughly a 30% discount. So if I'm at 1 and it's costing me 50 cents on every dollar, 30% off of that, so I'm going to lower that 15 cents on the dollar. That's going to give me, as a roofing company, a pretty freaking big competitive advantage, and being able to deliver my product and service, either going to create a better profit margin for me, or be able to compete and lower my price and capture more opportunities.
And even a bigger advantage when I'm competing against somebody that's doing worse than average. So somebody that's got a 1.3 EMOD and I'm at 0.7, I have quite an advantage.
Yeah, I mean, that 1.3 person would then be paying, if 50 cents is the average, then they might be paying 80 cents. Then is that, or
30% more?
Yeah, 65 cents or something, or whatever that is.
Yeah.
And think about being a contractor, which is where I got most of my background in this. If I'm doing large projects, I'm bidding work. I might not start for 6 months, and it may last 2 years.
Oh, so if your mod rate goes up, by the time you start, your margin on that deal, you might not misbid it, or it's going to cut into your margin on that deal because the project's so long, or it takes so long to get started.
Look, we went through COVID and they couldn't get couldn't get materials to do the work, even if they wanted to, for a while. But your EMOD sticks with you for 3 years.
Yeah.
So you're living with that going out, and you're bidding work that may take long. Again, it depends on how far out you bid on your work and how long the projects last. But a large commercial project, it can be quite a ways out there.
Go ahead. I'm sorry, Gary, correct me if I'm wrong, especially when it comes to the contracting world. When you're bidding on projects, some of them will request that you have a certain mod or not above a certain mod in order to be even in the mix to be able to bid, correct?
Yeah, a lot of times they're either going to look at your experience mod or your OSHA rate, and that will determine whether you can even bid. And it may be by municipality or cities required, and a lot of general contractors required. If you don't have an EMOD below a certain number. I had an interesting thing. I had a real large janitorial company. They could not bid. Again, they don't buy with the experience mod, but they could not bid on one of the big auto manufacturers' accounts to clean their factories unless their EMOD, I think it either had to be below 1 or at 1, and I helped them find a 1-point move in the EMOD. That 1 point allowed them to bid for this auto manufacturer and to get to work. And it was funny, a 1-point swing meant the difference of a lot of money.
Yeah. Yeah, that's big. And especially we've got the infrastructure bill and a lot of these government funded projects or government funded projects. They're going to have a lot of requirements that you meet certain OSHA requirements. The OSHA requirements and the EMODs are going to be highly related. They're going to be a reflection of each other.
Yep.
Yes. Yeah.
Not a perfect correlation, very similar. Yeah. So that's it again. So this is the topic today, right? Like I wanted to introduce this topic by talking about how work comp can either make or break your business. If it's too high, it can literally suffocate it. And it's inspired from actually Rob, your buddy Bobby introduced me to a guy, and he was talking about he's New York City. You guys are all New Yorkers, right? And he told me a couple of interesting stories about his client, this construction company. And he's like, the client doesn't want to have more than, I think it was like 200 employees or something. He was like, we're not growing. We're going to do $15 million a year in revenue. We're going to keep our head count under 200 employees. And that's it. Because I can't, if I get above that or I start taking on more work, the work comp is literally suffocating the profits out of that work that we'd be taking on. So we're actually going to stay small, not grow, because the work comp is killing.
Yeah, it's a devastating hit to a company's bottom line. And I've actually seen a handful of times where it has put a company out of business.
Yeah. Staffing companies, I see that. You get a lot of blue collar staffing agencies. And I've had some friends in this business and they play all sorts of games, like they're going from PEO to PEO or shutting down entity and opening up new ones. And then I've heard stories about guys who are like, you know what, just screw it. I'm not doing this anymore. They just give up the towel because of the work comp.
Yeah, I saw it with a moving company and I saw it with an installation company.
Yeah.
Moving company was trying to say that they didn't have employees. They had independent contractors. They got audited by the Department of Labor. And they said, you have employees. These aren't independent contractors. You tell them where to be, et cetera, blah, blah, blah. They notified the rating bureau or the work comp board in New York. And then the next thing you know, they got a bill. They got hit with charges for not having a policy. Plus they had to find a policy, put down a deposit, and it literally put them out of business. And it was something similar with the insulation company where they intentionally overly underestimated the payroll, knew that they were going to get hammered at the end of the policy period, but then never reserved all that money to make the payment. And it was like $160,000 that they wound up owing at the end of the policy period. They couldn't come up with it.
Yeah.
So they shut it down and tried to reopen, and then they're onto that.
Yeah.
New York Curve is onto that type of stuff.
Yeah. Yeah.
So I was going to say another interesting thing to just understand about the EMOD is, and I'm talking more in the middle market where somebody's buying the guaranteed cost insurance program. You can have a loss. Let's say it's $25,000. You skip a year, that loss, you depending on how your numbers work out, you may be paying for that loss and more some. So people think I got insurance. It's like taking out a mortgage. Every loss you have counts against you, and it costs you more over a certain year period. And in some cases, you're paying more than the actual cost of the claim because of the impact on your program. So simple mistakes, which I'm sure Rob can get more into in terms of not pulling out the overtime pay and some other things. There's all kinds of things that I'm sure you guys look at, and just simple clerical errors that are made that can be expensive. Again, contractors, we get busy. I mean, they get busy and they don't look at every detail, and it's not their area of expertise.
So Rob, this is one of the things that really caught my attention. Obviously, you might go in, you might find me a bunch of money, clerical error, but the thing that really caught my attention when we first started talking a few months ago was finding the clerical error that reduces the mod. Talk maybe a little bit about that.
So Gary, being a broker, right? And I don't know your experience, but in the 10 years that I'm doing this, I can probably count on one, maybe two hands how many times a broker, and I'm not trying to throw brokers under the bus. I guess I understand it. It's tough to see mod worksheets because you got to get them from the client or request them directly from the bureau. But a lot of the brokers that we work with and the clients that we work with, their brokers have never even seen the mod worksheets. So some of the simplest things that we find is that, number one, sometimes the calculation isn't correct. Okay, so that could be one error related to a mod. Sometimes the calculation's correct, but the bureau maybe transposed the number or didn't report it correctly to the carrier. So that's another type of mistake that we can find on a mod. And then to bring it all full circle for the mod, sometimes you'll see the carrier applies the wrong mod to the wrong policy period. So calculation, reporting, and then application. That's where you can see, that's where we see the issues with the mods. And again, Gary, I don't know your experience, but in terms of how you handled your clients, but again, majority of the brokers and agents that we work with, not throwing them under the bus, it just seems to be a common theme. A lot of these guys and gals aren't actually seeing the mod worksheets. Mistakes happen.
I do most of my work in the large deductible arena, and because it's not part of buying the insurance, they don't look at it, and they don't, a lot of times they don't even know how to figure it out because they aren't doing I call the middle market, the people that buy their insurance with the experience mod. What's interesting, you probably get it the same thing that I get. There are agents and brokers that love to have you involved because they're taking care of their clients. But a lot of times an agent or a broker gets nervous. If I bring you in, you may make me look bad because I missed something. Okay. And it's funny because you'll have some say, no, if you guys can help my clients out, come on in here and look at it. Same thing with what I do. I've had that conversation with some brokers. They'll say that it's going to make us look bad because you found opportunity or money in there. And I go, it's going to look worse when when a competitor goes in there and finds that for them. But I don't know if you run into that, but I do run into that occasionally.
Yeah, of course, we run into that all the time. As a matter of fact, that's probably one of the biggest facts that we get, aside from people think we're going to come in and try to steal the policy. And I'm like, that's not what we do. And we're not here to make your broker look bad. The fact of the matter is, work comp is highly complex. You have actuaries involved, you have underwriters, you have auditors, agents, brokers, clients, the rating bureau, the work comp board. There's a lot of interrelated yet independent, we'll call them bodies that are involved. And there's really not one body that oversees every step of the process. Everybody just does what they're responsible for. And all this stuff is eventually carried out by clerical folks. So the fact of the matter is, it's just human nature and mistakes happen. That's really what it is. We're trying not to throw anyone under the bus, but a lot of the agents and brokers that we do work with, a lot of them see us as a value add that they can bring to their clients, another touch point for their clients. And they get it. They just, at the end of the day, they just want what's best for their clients.
Yeah, I think that's true of the good ones, right? Which I think many of them are good. I think some of that might come with some emotional maturity as being a broker. I deal with independent sales agents in lots of different environments in the hiring world, and the newbies, they don't really understand it. Like that this is a commodity product for the most part. There's shopping it or doing it. The value the broker offers in this relationship is that sort of emotional intelligence and that intelligence to say, hey, I've got tools to help my client. And that's the value they bring to the table, and a deep understanding of the problem too, right? We were just on a call right this morning, Gary, with a broker, a really high performing broker out of Southern California. And he brought us onto a call with a payroll company, a PEO company, a risk management company, a labor attorney. Like, I can't remember the rest of the crew. There was like 6 people on the call. They're all adjacent, like surrounding the client. And he partners with all these different people because they make him look good. And they actually make his life easier too, because he can just call them, be like, hey, I got a client, they got this problem. Can you go talk to him? Now he doesn't have to do the heavy lifting, right? Like he's not having to be the risk management expert. He just has to be the jack of all trades and know enough to say, Gary, go talk to this person. They're going to solve this problem for you.
He's just focused on his client, which they should be. His concern is getting the best result for his clients.
Yeah. Yeah.
And that comes across, and I'm sure that's why he's so successful. That comes across.
Yeah. And what a great gig he's got, right? He's got a ton of friends. These guys make a lot of money. They do really well. And it's a great career. It's a hard career to get into, right? It doesn't pay well at first. It's like being an entry-level person on Wall Street, right? They pay you zero, but you can make a ton of money, right? And have a great career and a great life. So that's awesome. Rob, what did we miss? Any little takeaways about what you do or this world that you're in of finding money in these existing programs? Was there something we should have talked about that we didn't?
Not really, other than what I would say is at the end of the policy period, so you're going to get that audit from the carrier. Something that COVID presented is not allowing people to go and visit in person and do the audits in person. So they've resorted to either sending out a link and, hey, just upload the docs that we're requesting to the link, or mail it in, et cetera. And I think that when you're going through these audits, you want to be as organized as humanly possible. You want someone that's intimately involved in the business, that knows the business inside and out, to be the point of contact for that audit. And ideally, you really want that person to come out. I know they've started to come back out and doing in-person audits. You really want to opt for that in-person audit so that you can add the context rather than just uploading. The auditors don't know. They just look at what they've been presented. Oh, okay. And if anything, Gary, you'll agree, anything that's left open to interpretation is automatically going to be classified in the highest code on the policy. Be organized at the end of the policy period. I think even just the appearance of having yourself appear to be organized, that goes a long way with the auditor, because they know that you're ready, you're prepared, and that typically makes for a much smoother audit with less probing.
So maybe pair like a head of ops with a lower level accounting person to help with the audit. And so that way because I don't know, as a COO, I'm not going to prepare this documentation, right? So I'm going to need somebody internally that maybe help me, but I should be putting my eyes on that to make sure that it's accurate and be the liaison with the auditor, not leave it to my staff accountant who doesn't really understand the business very well, right?
Yeah, you got to have someone that's intimately involved in the business. They'll send you a list of documents that they're requesting prior to the audit to make sure that you're squared away. But again, definitely want someone that knows each class code, what their responsibilities are, who these folks are, and making sure that they have all the payrolls and the 941s and all that stuff together.
It's great advice. So you solve fixing, you go in and you find the money, you fix it, and that can obviously have an immediate impact, lower mod or just cash back from mistakes. And that's huge. And we came together because, Gary, you prevent it. We love this 1-2 punch. Right?
We prevent it and we mitigate it, I should say, when it does happen. So a little bit about what I do. I've got a model, and just roughly speaking, is I look in 4 areas. And again, I'm focused on the losses. And when somebody mentions work comp, what's the first thing they think about? Safety, safety, safety from that end of it. I use Maslow's old saying about, to a man with a hammer, everything looks like a nail. What's causing that loss? What's causing the magnitude of the loss may or may not have anything really to do with safety. And there's a lot of things that drive workers' compensation costs, everything from age and comorbidities and other things, as well as integrity, which we'll get into a little bit here on that. You can hire, if you hire a problem, I call problem employee, a bad employee, a employee that is not very, doesn't have integrity, not very trustworthy, they can take advantage of the work comp system. And sometimes it's not directly, we think about fraud. If you look up 2020 work comp fraud, you'll see some great videos of all kinds of things going on out there. But a lot of these people they're just people that always have issues. So they come to work for you, they either get hurt more often, or they pretend they get hurt more often, or they just seem to go on forever. And so that's a big part of it. I look at how they do the hiring and the firing. I look at, when I get involved with a client, I do a deep dive into claims. I look at every note, I read all the medical notes, and I look at what's the real story here and how did the employer treat this injury? Did they take care of this employee? It's an interesting thing when I work with large employers. A lot of times they have a person gets hurt. Let's say they're in the hospital, and I'll say, "Did you go see him or did talk to him?" He go, "Can we? It's work comp. Can I? What if I say the wrong thing?" I go, "Call him up and go see him and see how they're doing. Ask them how they're doing."
Flowers and a teddy bear, you can't go wrong.
But it's interesting. It almost seems like the larger the company, the less they know about some of those things. And it's just a fear factor. They're not involved in it. And I go, these are people you work with and they hurt. I mean, something happened. You call them up. How are they doing?
Yeah.
One of the most motivating things you can do if somebody is either off work and you want to get them back is to call them up and say, gee, Fletcher, I'm sorry about your injury. We really need you back here to work. And just that alone, telling somebody, we need you, we want you back here. Yeah. And again, most injuries, we talk about the fraud and things like that, but most injuries are not fraud. Most of them, 80% of them are people that got hurt and we want it taken care of. And so if anybody has had a back injury and a muscle spasm where you think you're going to die, you can't move. Okay. 94% of the time, medically speaking, it's not a big deal. Now, if it's your back and you have a spasm, you think life's coming to an end after 2 or 3 days of it on that end of it. And if you're sitting at home, you start thinking, maybe my employer thinks I'm faking or whatnot, and you build up this wall. And what we need to do is tear down the wall and treat people like that. And the other thing we have to realize, other than the employer, almost everybody in the work comp system makes more money the higher the cost of the claims. The TPAs make more money on cost containment charges as it grows up, or insurance companies on loss sensitive programs. The doctors, the attorneys, everybody involved makes more money the higher the claim costs are.
Yeah.
And so it's a system that just seems to take people in that have issues and expands. So we focus on management, how you treat employees. From that end of it, we take a look at how do you hire and find employees? Are new employees driving the cost of claims? And Travelers Insurance came out with a great study recently that said 34% of all injuries or costs are coming from new hires employed less than a year. And in some industries, it's 50% or more. And I'm seeing that increases rapidly. And the most interesting thing about their study that I don't think people are focused on, they say it's regardless of experience in the industry. So it's not just I'm inexperienced, I've never been trained. It's just people that have issues are coming into the system right now. So hiring and firing is a big area of it. Safety and how that things are enforced. And then I break claims down to what does the employer do? Return to work, tender loving care, all those good things. What vendors and doctors do you use? And how is the TPA or the insurance carrier handling the claim? So I look big picture. So a big area for me that is involved with integrity testing. It's math for me. I look at any large employer, and if they say 15, 20, or 30% of your claims are coming from new hires, I recommend integrity testing. I have never not gotten the expected results in savings and reduction of claims by using that tool.
Yeah, and I think you nailed it. There's something about integrity, and I'll steal your quote, your Warren Buffett quote. There's 3 things Warren Buffett's known for saying: hire for integrity, energy, and intelligence. And if the person lacks the first thing, right, integrity, then the other 2 will literally probably kill you, because that's what they call con artists and pathological liars. And that's what took down Enron, a multi-billion-dollar company. Really smart, energetic accountants who started with a very small lie. It wasn't a good lie, but it was a significant lie. And if anybody's watched the documentary, one of the documentaries on it, it just started with them. They fudged some numbers to make their quarterly numbers and make sure that their stock price didn't get a 4% hit. Okay, yeah, 4% hit on your stock price is not good, but also going out of business is really bad. And that's where it all started, right? Yeah.
We probably should talk a little bit about the integrity testing. What is it? Okay.
Yeah.
So integrity testing is a pre-employment tool. It's an online test or survey that applicants take. Takes less than 10 minutes to take. And we're looking for people with high risk behaviors such as theft, lying, faking, use of substance abuse, or hostility. So it gives you qualified or unqualified results right away. It makes the hiring process very efficient. And then And what we find, about 23% of the applicants are what we call unqualified. People that, use this test, they find that the screened employees that are qualified have a 48% lower accident frequency rate, 19% lower severity rate. And in my studies, I'm finding even better numbers than that, but we're combining a lot of different things together. It's just a great tool from that perspective.
Yeah, and I think it makes sense, right? When you're screening people for drug use, habitual drug use, and for predisposition to stealing, theft, right? And then obviously hostility, and then lying. And I think lying might be the biggest thing here, possibly, right? Integrity wise. But those are the people that come in, and that's the difference between the person who strains their back, is out for 3 or 4 or 5 days, who we desperately love and we miss you, Gary, at work. I understand you strained your back. Look at help you take all the time you need, but we miss you. We love you. What can we do to support you? And you're like jonesing to get back to work, not calling your attorney.
Yeah. So I have a new quote for you. Okay,
Yeah.
Fletcher. Okay, these are quotes. The quote by Gary. Okay,
Yeah, quotes Gary.
on that, a quote by Gary. Okay, for that,
Yeah.
But yeah, in workers' compensation, most often, it is not the severity of the injury that drives costs, but the character of the employee and management of the claim. So not a couple of examples that I was going to give you here. I just did a study for a client, and the largest claim was a 30-day employee, so brand new employee. After she was asked to work overtime, she said, "I have a sore shoulder," and could not explain really why it happened. This is the largest claim for last year on that. And she couldn't really explain why it happened. And then turns out she's got an ISO rating, and ISO rates how many claims people turn in, different things, of 999. And the rating goes from 0 to 999. She had the highest score possible, meaning, Fletcher, if you hire her next week, you're going to have another claim, okay, on that person. So that's one. And then they had another one, it was a recreational director. And she said her shoulder was sore from playing the guitar. Okay. That was a $354,000 claim. Now,
separated AC clavicle, and I'm out there surfing every day, by the way. So
Nice.
we got that on record.
Sore shoulders.
We got that on record. That ain't going to count. Okay. So now to contrast that, an 83-year-old employee who tripped, fell, struck her head, had to have emergency brain surgery to release the pressure, was back to work in 2 weeks, and been a great employee ever since.
That's
so
right.
People with integrity and really want to come back to work. The system, we do a good job with that, and you want to treat them right. But that I just contrast that. So a lot of times it's frustrating for employers because they do a lot of stuff with safety, and then you get these problem employees on that. And I will tell you, when I dig into claims, I find out not just the claimant of it, I'm looking at all the absenteeism and all the problems and headaches with other employees and things they call it. They're just the people that get you. And it's frustrating because we spend 80% of our time talking about the problem, where 80% of people are not a problem. We want to do the right thing and it works out well, but it's frustrating for employers that are faced with that.
Yeah. So I call those problem generators, and then I call the Warren Buffett people, the ones that are really smart and really energetic, those are called talented terrors.
Nice.
And I borrowed that from, I think, Mark Murphy and Hiring for Attitude. So Rob, where do you see this? Do your clients talk to you guys about this kind of thing? Do they complain about this stuff, or?
Here and there, you hear them complain about it. There was a study done, I think back in 2014, it was Aflac or Colonial, that it was a study on, it actually had to do with voluntary benefits and how they can help reduce premiums. And it's because if some of these employees know that they're covered off the job, like if they have these voluntary benefits, it would prevent some of those fraudulent cases. And I'm thinking to myself, how does that work? And the gentleman that I was talking to, so let's say I'm playing touch football on Sunday with my buddies, I tweak my knee, next thing I go into work and I fell, it eliminates those types of those claims. But you definitely hear about the weird or the fraudulent claims, those weird ones where you just like scratching your head, like, really?
Well,
And
yeah, and
you
again,
understand,
always fraudulent, right, Gary? We just got off a call. The guy cut his arm off because he was high out of his mind on meth.
yeah. So you obviously have injuries due to substance abuse and things of that nature. Very much is the case. You do get a lot. There are some fraudulent cases where the knee on the weekend playing softball then and comes in, and we just focus sometimes on the employee, but the doctor's got a choice. I got a guy who doesn't have any insurance, and if I call it work comp, I'm going to get paid in 30 days. And if I say it wasn't work comp, he's telling me then I'm not going to get paid. So the medical system has some issues in it also. So it's motivations are in there.
But I love the analogy you gave of the 80-year-old who cracked her head open and had emergency brain surgery. But that's the difference, right? And I think that's also a reflection of the culture of the organization. And it's a reason why, since I was 16, I'm 41, that I've been in this business. This is something I learned from my father, and it's left with me is that when you build organizations with great people who have great attitudes, who are great team players, great cultures, organizations with great cultures, where A, great things happen, but B, these bad things don't happen. When something terrible happens to an employee, because bad things do happen, but they don't become litigated. They're not nightmares, they're not problems, they're things where, and again, because you said the two sides, we care about the people on our team, so the organization naturally has a culture of care, of empathy, and they're going to send you flowers and get you teddy bears and call you up and see how you're doing. But they're also the people who are coming in, they're also not the types to say, let me see how far I can take this, right? Like my friend with the concrete company, he had 3 minor accidents. It's like one of the guys, literally a fender bender, he's driving a concrete truck, Prius bumps into him in a low speed accident. He literally comes back into work and starts bragging to the rest of the employees about how he's about to get a big payday. Not that kind of person. And that is culture too. Like that culture builds like, oh, Bob did it, Joe did it, Jane did it. Like now Rob might think about doing it next time. Right? So it's a cultural thing, but maybe we can't prove all of that, but some of these studies, like you said, what Aflac or say did, or what the studies behind, say, like Integrity First, 550,000 data points. Like the exact reason why we know there's these psychological, there's just things behind it that are driving it, but the data just says flat out, it lowers the number of frequencies, it lowers the severity, it lowers the cost, it lowers the turnover. And so whether you believe the psychology or not, data doesn't lie.
When I first got involved in this, one of the first large clients I did was a restaurant group, and I couldn't even wait till 12 months. At 11 months, I had to look at the results, and I had them buy integrity testing and put it in place. And I pulled the numbers and nothing happened. I was going, what, how can this be? How can nothing? And they said, wait, let's verify it. And it was interesting because we found out some managers weren't testing the new hires. And then worse than that, some were testing them and they failed. And we pulled the numbers out. Again, I was sick because I recommended this to my client and they spent the money and they didn't get results. And then once we pulled the real data, it was an 84% difference between the people that they were screened versus unscreened. Just incredible results. So I'm just a
That was
big
an
believer in the
unintentional
product.
blind study there.
Yeah, it scared me. I called up the prior owners of the product and I go, how can this be? And they go, Gary, it's never happened. Okay, don't panic. It's never happened.
Yeah.
Let's go look at it. And so that was really an eye opener for me. And I call it terror to triumph. Whew,
Yeah.
man.
Yeah.
You want your clients to do well.
Yeah, you want to win in this. Okay, look, guys, it's been fantastic. Rob, how do we find you?
You can go to recoveryguardian.com. We have a web form on there. You can click a free 15-minute consultation, and that's really all it is. I just ask a couple of questions, or my partner, Bobby Girantano. We just ask a couple of questions to see if we're a good fit. It's pretty simple.
If you don't find the money.
Or info@recoveryguardian.com. Yeah, if we don't find any money, there's no cost. So my wife says all the time, she says, I understand why everybody doesn't do this.
Yeah.
There's no risk.
Yeah, yeah. And Emilio will drop links to websites and to LinkedIn profiles if anybody wants to connect with Rob or Gary. Gary, what's the best way to get in touch with you and share about?
You can call me, or my email is, I guess if you're going to send that out, but it's theedgeisyours.com. And the phone number is 303-883-3162.
Love it. Everybody's going to call Gary.
Good. Give me a call.
No. Well, as we repurpose this content, reshare it on social and on our newsletter and our website and everywhere else over the world, we will share contact info. So don't fret. You'll be able to get in touch with Rob or Gary, learn more about their solutions, use both and solve the whole problem. Maybe, I don't know, end to end. But thank you very much,
We
guys.
should talk more, Gary.
Yeah.
All right. You bet. Let's
Love
talk.
it.
All right.
Thanks, guys.
Thanks, guys.
Really enjoyed the
Thank you, guys.
Bye.
Yep. Bye-bye.